With a new social media platform seemingly emerging every few months, it's hard to be sure if investing in one is wise. On one end, depending on the purpose of a platform, it can show promise early and become the next big thing. However, there's always a chance that it won't perform well, a chance that some investors may not want to take. Welcome back to another episode of Living Fire. If you never want to miss an upload, make sure to subscribe to the channel. Investing in social media networks has changed as people become more well-versed in how these investments perform. Social media investments used to attract a lot of attention. Excitement was high and stocks were quickly climbing. But now that the hype has subsided, some investors wonder if there's any benefit to investing in established social media platforms. Income growth may not be as high as it once was. However, an investment in social media has the potential for longevity as social media becomes more ubiquitous. Social media is fast and consists of many websites and platforms, which can be overwhelming for new investors. Investment criteria are a combination of an investor's personal preferences, financial goals, and research, so understanding these variables is key. Here we'll address the nuances of social media investing and learn how both novice and experienced investors can make smart decisions. How to know which platforms in which to invest. Selecting platforms in which to invest can be daunting, and your decision will depend on your preferences and overall investment goals. From social media to content creation platforms, there are numerous investment options, so conducting research is critical. However, this research need not be formal. You can gain significant insight by studying the daily activities of these platforms. It is perfectly normal for investors to show trepidation when it comes to social media investing because outcomes vary widely and are impossible to predict. Since younger generations can make or break social platforms, an app or a website that has a slow start can easily become the next big thing within a few weeks. That is one of the reasons that people continue to invest in social media. For many investors, it's more of a risk to invest in a service that has already plateaued and won't see more exponential growth than to invest in something that hasn't yet generated any revenue. These investors may be seeking a so-called unicorn and will be well served by investing in a brand new social media startup. Risk-averse individuals, on the other hand, may prefer to invest their money with a known quantity with an established and predictable revenue model. Investing in established social media platforms can also be lucrative. An investor doesn't have to use social media regularly or even like it to invest in it. Although it seems as though platforms with millions of users are done with their growth phases, that is not the case. In addition to the creation of new social platforms, many established platforms continue to add new services as they mature. New services enable existing platforms to target new audiences, and this is how established companies grow quickly. These services fulfill niches addressing specific needs. Social media platforms with substantial audiences are able to provide a platform for other businesses by offering ad services. These revenues continue to make established sites, such as Facebook and Instagram, good investments even though the initial hype surrounding them has waned. Increased internet access is another reason to consider investing in mature social media platforms. Due to technological advances, the internet is becoming increasingly available to users worldwide. Only about half of the world's population is online, and that number continues to grow. When internet usage rises, social media platforms also see increased traffic. This means that there is still potential for established platforms to expand their user base significantly. Is social media investing right for you? Investing can be confusing, particularly when it comes to social media. Knowing where to invest is hard, but conducting sufficient research and clarifying your goals will make the choice much easier. Whether you choose an established social media website or a less popular social platform, you can reach your goals if you invest strategically. Platforms tend to decrease in popularity over time. However, internet use continues to grow, and new apps are always being developed. This makes social media one of the best investments because there will always be new investment opportunities on the horizon. It's always a good idea to get investment and financial advice from a professional, like an accountant or an investment specialist. Doing so can give you answers to questions you may have, and also guide you to make the investments that will best suit your needs. Social media isn't just the rage for the younger generation to communicate and for the older generation to stay in touch. Social media has become the way for advertisers to reach potential clients, and as a result, social media stocks are hot. This is because money is flowing into these businesses, as advertisers want to place more and more ads aimed at their demographic, and this makes sense. Why pay to advertise on television or in a magazine when you only have a few points on the demographic? With social media, you have many points and can narrow down specifically to who you want to target. But even though money is flowing into social media stocks, not all are going to be worth your investment dollars. Here are the 3 big players and why they should pique your interest. Which social media stock should you invest in? Number 1, Snap, also Snap on the NASDAQ. The truth is, they had a great quarter, but you need to determine if they can keep it up. For the short term, they might be able to. Number 2, Twitter, or TWTR on the NASDAQ. Twitter has been an also-ran for a few years after the stock went public. At first, investors jumped on the hype of social media, thinking investing in these companies would produce instant riches, but they quickly learned that is far from the truth. But things are changing with this stock. User engagement is up, advertising is up, and so is earnings. As a result, investors are looking at this stock in a new light. But you might be out of luck here. Elon Musk might have already taken the company private by the time you see this, or the whole thing could hit the proverbial glass window, and Twitter is still on the market, although with a few more bruises under its wings. Number 3, Meta Platforms, or FB on the NASDAQ. Previously known as Facebook, this stock has pulled back from its long run up, and now is a great time to get in on this stock. They are innovating social media, and as a result are making a lot of money in the process. Stock pricing services often recommend Facebook. With their recent announcement of investing into what they've called the metaverse, an internet platform allowing a single, universal, and immersive virtual world that is facilitated by the use of virtual reality and augmented reality headsets, coupled with the fact that Meta is also branching out into hardware, having purchased Oculus back in 2014, and making it one of the leading VR headset manufacturers in today's market. And with that, we've reached the end of this episode, all about whether it's worth investing in social media stocks. Do you invest in any social media stocks? Then get involved and let us know in the comments section down below. If you enjoyed this one and found it helpful, remember to leave a like on the video and to subscribe to Living Fire for even more amazing videos just like this one. Thank you for watching, and we'll see you in the next one.